Students, I think the previous session, I stopped in the features of indirect taxes. Continuing with the features, the next, the merits and demerits of indirect taxes. Well, the merits of indirect taxes, the first important advantage or merit of indirect taxes are indirect taxes constitute over 71% of the tax revenue of the government. And in that 71% of the indirect taxes which is being collected by the government, a larger amount comes through service tax. So indirect taxes are the only means for government resources for auxiliary economic development. The second one is convenience. What is this advantage of this? It is collected at the convenience of the particular process of collection. So since at the point of sale it is collected and the consumer even does not feel the pinch that he is paying the tax. So it's a very convenient tax to collect. When you go and purchase something, when you consume something directly from the shelf, you will probably make sure that you are not going to ask what is the price of the product, what is the tax I'm paying on the product. No, you're not going to in detail breakup of the price. All you do is you go and ask, you want a brush? You'll say, how much is this? 30 rupees. Okay, just pay 30 rupees and get the brush, right? So one of the most important thing is very, very convenient. Indirect taxes are more convenient to the taxpayers since tax is included in the selling price of the commodity. The consumer pays the tax when he or she purchases the item on the shelf. The third one is economy in collection. What do you mean by economy in collection? Unlike, we need to go and individually collect taxes from individual payers. It is collected from at the point of sale. And you see that in case of excise duty, when the goods leave, immediately before it leaves the factory gate, it has to pay taxes. Since most of the indirect taxes are collected by traders and manufacturers and passed on to the government in lump sum, government burden is reduced. So therefore, it does not need to have any special team and task force to collect the taxes, and therefore it is one of the cheapest method and way of collection of taxes directly from the manufacturer. Therefore, there is economy. And the fourth point is every member of the community, both rich and poor, can be taxed through indirect taxes. So there is no discrimination here. If you earn more money, there is no progressive or regressive tax system. Here, whether it is a rich person or a poor person, the tax that he contributes to the government is in a uniform. So can be taxed through indirect taxes. The tax burden is not imposed on the small section, but it is widely spread. Thus, indirect taxes have a wider scope. Whether it's a poor person or a rich person, whenever he consumes a particular commodity, he is going to be paying taxes, same rate as a rich. The fifth point, the advantages, indirect taxes are levied on a large number of commodities, which provide the flexibility to alter the rate whenever government wants to raise its revenue or lower it. It can be achieved by increasing and decreasing the rates of taxes on the commodities whose demand is inelastic. So what they do is, this is where they, bring in that kind of flexibility, because it has that flexibility to charge rate. If you are aware, you could see that when GST was introduced, there were various rates at which you were being taxed. 5%, 8%, 12%, 18%, 24%, and highest was 28%. Now slowly removed. They charged 28% on esteemed commodities at one point of time in the form. Now the 28% is coming. So that flexibility is there. The government can decide the rate at which it has to tax each and every. Next, less tax evasion. Since it is the burden is not fair. Okay, so people cannot evade this particular tax. Okay? If somebody has to evade, not the consumer, but the manufacturer can do something or the other. But a consumer cannot evade tax. He has to contribute the indirect tax. Okay, and it is progressive in nature. Indirect tax can be made progressive by imposing lower rates of taxes or giving exemption to the necessary articles and heavy taxes on luxuries. So here it could be a progressive. I just told you about it in terms of heavy taxes on luxurious and esteemed. And the eighth point, effective allocation of resources. Indirect taxes have a great influence in the allocation of resources among different sectors of the economy. Resource allocation can be made effectively by imposing heavy excise duties on low priority goods and by granting relief to industries producing high priority. So how we can make is that we can curb the resources. Lionel Robbins' definition says wants are many, but resources are very, very scarce. So we have to make sure that effective utilization, indirect tax can help you to, put a curb on the effective utilization of or allocation of resources. Then the final advantage is discourages the consumption of articles injurious to health, such as indirect taxes are imposed on intoxicants like wine, opium, tobacco, liquor, drugs, cigarettes, etc., which are very harmful to the health, and their consumption can be reduced. So this is the advantages of indirect tax. Demerits of indirect. So the first one is regressive in nature. Indirect taxes are charged on commodities of general consumption. Since the indirect tax is uniform, the tax payable on commodity is same, whether it is purchased by a poor man or it doesn't matter. Okay, it is the same. Number two, reduces demand of goods. Taxes on goods increases its selling prices, which reduces demand of goods. Lesser demand means lower growth of industrialization. So here it could probably impede, but many a times that when it comes to demand and supply, the law of equilibrium, we cannot literally maintain the equilibrium, but there are exceptions to this law of demand and supply. You would have heard about the Giffen's paradox or the Wembley effect. It doesn't matter if you really want the product, even if the taxes are high, the consumption will. But anyway, that is also another major demerits of indirect taxes. Less productive. As indirect taxes involve many stages, the cost of collection may be high in relation to revenue yielded. That is, it is to be collected from lakhs of people, all amounts, and large number of staff should be employed for. But very rarely we can say, but in a very small way, it could probably affect the productivity in nature. The fourth demerit, discourages savings. Since indirect taxes are included in the selling price of the commodities, people have to spend more with the rise in the prices of the commodities, which discourage selective commodity. High indirect taxes on certain selective commodity may discourage the production of that particular commodity itself. So they may discontinue the production because the government is imposing a lot of taxes on the revenue from indirect taxes cannot be estimated accurately because tax is imposed on the commodities, its prices rise in the market. Consequently, its demand may also fall. So we can't say that we will receive so many crores in this particular year by the way of indirect tax because of the uncertainty in the prices and in the collection of the. Now, once taxes are collected from the manufacturer, it goes to the government tax. But at the same time, unless and until that particular product reaches the consumer and is being consumed, unless and until the consumer purchases it, consider it as a tax which is being collected by the manufacturer, even though he is already remitted. No civic consciousness, indirect taxes being invisible and they are collected through middlemen like traders. They do not promote any kind. That means it does not create any sort of personal responsibility because the consumer is not aware that he is paying tax. Then because of these kind of indirect taxes, this could lead into what we call as smuggling and black marketing. You can see that many a times that even though there are very strict rules and regulations with regarding to smuggling and black marketing, people still do it so that they tend to avoid these kind of indirect taxes because of the high rates. Normally, harmful substances are levied at high tax rates. This may lead to smuggling and black marketing in such goods, adversely affecting the morale. Okay, so with that we come to the end of the features or characteristics of indirect taxes, merits and demerits. So the next particular topic is that the difference between direct taxes and indirect. Now, direct taxes contribute 25% to 35% of the total revenue generated for the government, but whereas indirect taxes contribute 65% to 75% of the total revenue or public revenue to the government. Point number two, they do not have any impact on costs and prices of goods, but in indirect tax, it increases in rates of indirect taxes leads to increase of cost because value addition is done at every stage. Direct taxes conform to the principle of equity, whereas indirect taxes do not discriminate between rich and poor. So what is this principle of equity? Equity means the person who earns more money is taxed more, but here in case of indirect tax, it doesn't matter whether you are rich or poor, it is the same rate. Direct tax is levied on persons who possess property or earn income. It is levied on persons who spend their income or incurred on expenditure. So here, tax is on income, indirect tax is on your expenditure. Fifth point, incidence of tax is directly on the taxpayer and incidence is on different. Incidence on one person and impact is on another person. Then shifting is not easy and taxpayer has to bear the taxes, but whereas the tax can be shifted to the other individuals, the rich and wealthy usually bear the burden. Burden is proportionate but relatively heavy upon the poor. Scope for evasion is high through falsification of accounts and suppression of income. So therefore, evasion can happen in direct taxes. But whereas evasion is highly impossible because you definitely have to bear the taxes whenever you buy goods, and it adversely affects the taxpayer's ability to save and invest. Savings and investments may be increased due to the reduction in the usage of non-essential goods or services. 10. Taxpayers become conscious of tax burden due to the direct impact of the tax, and taxpayers may not be aware of the tax and remain ignorant. And income tax, wealth tax, and estate duty are examples of that. Sales tax, excise duty, and customs duty, and service tax are examples for the indirect tax. So with this, we come to the end of introduction to indirect taxes. I'm just going to play a video.
Today, let us try to understand about direct taxes. What are the advantages and disadvantages of direct taxes? What is indirect tax? What are the advantages and disadvantages of indirect tax through this video? According to Chris Rock, you don't pay taxes, they take taxes. Before we go, what are direct taxes and indirect taxes? Direct taxes. Direct taxes are one type of a tax that is levied directly on an individual taxpayer or an organization who pays it to the government and cannot pass it on to someone else. Direct taxation is levied on income, wealth, and profit. Such direct taxes are calculated based on the ability of the taxpayer to pay, which means that the higher the income or their capability to pay, the higher are their taxes. Now let's look into the types of direct taxes. Income tax. It is based on one's income. A certain percentage is taken from an employee or worker's salary depending on how much he or she earns. In this, an individual falls under different tax brackets based on their income or revenue. The government is keen on listing certain credits and deductions that help to lower one's tax liability. They can also file for tax returns every year where they will either need to pay the tax or be eligible for tax refund. Transfer tax. The most common form of transfer tax is the estate tax or inheritance tax. It is raised on an estate or the total value of money and property that an individual has left behind after their death. A gift tax is also another form of transfer tax, wherein certain amount is collected from people who are transferring properties to another individual. Property tax. Property tax is charged on properties such as land and buildings. Capital gains tax. The tax is charged when an individual sells assets such as stocks, real estate, or a business. The tax is calculated by determining the difference between the acquisition amount and the selling amount. Advantages of direct taxes. It promotes equality. Since they are paid depending on the amount an individual earns or how much they make, it promotes equality among payers and citizens. It promotes social and economic balance. It curbs inflation. The government often increases the tax rate when there is a monetary inflation, which in turn reduces the demand for goods and services, and as a result of decreasing demand, the inflation is bound to decrease. Promotes certainty. The advantage of direct taxes is that they are determined and made final before they are paid, as long as the income or the salary does not change. The annual tax is also the same every year. Economical. The government does not have to spend on collecting the taxes. They are mostly collected at the source. Some companies use automatic payroll deduction systems which help save time and money. Now let's look into the disadvantages. Evadable. The payer can submit a false return of income and thus evade the tax. This is why a direct tax is a tax on honesty. There is a lot of evasion. Disincentive. If the taxes are too heavy, they discourage savings and investment. In that case, the country will suffer economically. A high level of taxation discourages investment and enterprise in the country. It inflicts a lot of damage on business and industry. Creates social conflict. Since not everybody has to pay direct taxes, it is often responsible for creating social conflict amongst societies. It also leads to crime, social injustice, and a sense of inferiority among different groups of people. Indirect tax. These taxes are not levied directly on the income, profit, or revenue of an individual, but rather on the expenses that they incur. It can be shifted from one taxpayer to another. Indirect taxes are actually levied on the sellers of commodities and services, but they pass it on to the consumers and hence they end up indirectly paying such tax. GST, or the Goods and Services Tax, is a good example of indirect tax. GST is applicable to anyone selling goods or commodities, and they usually do not pay this from their pockets, but rather add it to the cost of the commodity and charge it to the consumer themselves. Advantages of indirect taxes. Everyone can contribute. Unlike income tax, which has to be paid by the individuals in certain income brackets and not others, indirect tax have to be paid by each and every one who purchased the commodity. They are convenient. Indirect taxes are convenient compared to the direct taxes. Firstly, taxes are very low and the consumers do not feel burdened when paying such small amounts. Secondly, they are hidden in the price and the consumer only sees the price and do not feel the burden of paying the tax. They cannot be evaded. Indirect taxes cannot be evaded as they are part of the price of the commodity, so anyone buying the good or commodity should pay the tax. They are spread over a wide range. Indirect taxes are beneficial because they are spread out over a wide range of products in small amounts. Now let's look into the disadvantages of indirect taxes. They can be regressive. Since the indirect tax is levied equally on everyone for both rich and poor, it can be deemed unfair to the poor. As the rich can afford to pay, the poor are burdened by the same. Thus, indirect taxes may be seen as regressive. They raise the price of the commodities. Sellers cannot always calculate and collect the exact fraction of the tax applicable on all the commodities they sell, and hence they charge more so as to be sure that every buyer paid the indirect taxes. But this increases the price of commodities. Now let's look into the difference between direct tax and indirect tax. Meaning, direct tax. If a tax is levied on the income or wealth of a person is paid by that person or his office directly to the government, it is called direct tax. Indirect tax If a tax is levied on the goods or services of a person and is collected from the buyers by another person, that is, a seller, and paid by him to the government, it is called indirect tax. Incidence and impact. Direct tax falls on the same person, imposed on the income of a person and is paid by the same person, whereas indirect tax falls on different persons, imposed on the sellers, but collected from the consumers and paid by the sellers. Burden. Direct taxes, more income attracts more income tax. Tax burden is progressive on people. Indirect taxes, rate of tax is flat on all individuals. Therefore, more income individuals pay less and lesser portion of their income as tax. Tax burden is regressive. Evasion. Tax evasion is possible in direct tax, whereas in indirect tax, tax evasion is more difficult. Inflation. Direct tax helps in reducing the inflation, whereas indirect tax contributes to inflation. Shiftability. Direct tax cannot be shifted to others. Indirect tax can be shifted to others. Examples: direct tax, income tax, wealth tax, capital gains tax, securities transaction tax, perquisites tax. Indirect tax, GST, excise duty. Both direct and indirect taxes are important for the betterment and growth of the economy.